Let's start, Jeff, with Peloton. As people may know, I am an owner of a Peloton. I like the Peloton. They're cutting jobs. Are they going to cut some of their instructors, or are these basically back office manufacturing sales jobs?
Yeah, I think it's basically some of the back office stuff. And look, this is a COVID darling, but it's down a ton. So the question is there value here? And to your point, I think you hear a lot about sort of restructuring contracts, cutting costs, the announcement today. So I don't know that the news is good, and I don't think the stock is particularly cheap. And I think that's the key when a stock has moved this much. It's not supposed to be profitable out to 2027. So if you take today's stock price at 2027 earnings, it's still trading at 230 times. So I just think there are better places to put your capital right now.
That's a nice way to say it.
Transocean's next. So we go from cycles to the seas.
Yeah, a big difference here. This is kind of a complicated one. I mean, the stock got whacked. It was down 40% last month, and it was really due to some liquidity problems that I don't know necessarily go away. There may be some more shareholder dilution in the near term. But if you were looking to catch a pop as a trade, the stock is now up 40% just in the past couple of weeks. Now, longer term, I think there is a case to be made. You have some of these rig rates going higher. You can make the argument that you're at the beginning of this upcycle in offshore drilling. So there could be upside in this name. Just know that at this point, given the problems with their balance sheet, you are making a speculative trade.
We have another name that begins with P, Pinterest. And look at that. Look at the similarity between those logos there, Peloton and Pinterest. Look, oh, well, we got rid of it. But talk to us about Pinterest.
Yeah, Tyler, this is one that I actually kind of like. I mean, I think about a bad market and a good chart, and this falls into that category. It held 18, which I think is a pretty important level. The 50-day is now hooking higher. It's now above the 200-day moving average for the first time in a year. So there's some momentum in the stock. And relative to the business, sure, you're seeing some slowing growth, but user growth is now stabilizing, which I think is important. And maybe most important in this market, it's a money-making business. You have improving free cash flow margins, really important in this kind of market. And the new CEO seems to have a clear vision, really capturing more commerce related to some of their users. He has that background from his time at Google. So this is a stock that I think there is some pretty decent upside.
Let's come back to that Peloton thing. It's selling at 200 and some times what year's earnings?
So it's not going to be profitable until out to 2027, right? So if you look at that way out year earnings and you put today's price on it, you're assuming that it hits profitability out in 27. You're still talking about a pretty lofty valuation.
5 years to profits. Jeff Mills, thanks.